There are three key things to keep an eye out for when it comes to Canada and its real estate market. The first one is the CBC investigation that is kind of blowing up all across the different news outlets, and it's basically about mortgage fraud. We'll also be discussing the housing bubble. There's a couple different articles from UBS and also from BMO that highlight that we are leading the way when it comes to the biggest bubbles in the world. And we'll also be touching on the 5-year fixed mortgage rate that is just absolutely exploding higher. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. Starting out with the CBC Marketplace investigation that took the news headlines by storm. What had happened is the CBC sent out 10 investigators to different mortgage agents and real estate agents with an understanding that they wouldn't be able to qualify for a mortgage. What they did tell them is that they had a 20% down payment, but they were unsure that they were able to get a mortgage because they had an undeclared cash income. But still, these agents recognized very quickly that the couples would not qualify for the mortgage, but 6 out of 10 when offered to facilitate mortgage fraud. And they did this by offering counterfeit documents, showing that they had a salary, whatever they were able to do to kind of push the buyers into buying a home so that they would make the commission, if not charge a fee for doing so. This is something that I'm sure a lot of people were aware of, but this article brought it to the popular mainstream media. And what does this mean for the markets long term? Obviously, they put in the proper protocols to ensure that, if the marketplace does go down, people would still be able to afford their mortgage if the interest rates were able to go up as well. But with these fraudulent things going on, it doesn't have a backstop. And what we can see here is that as interest rates and housing prices drop, these buyers are most likely to default on their payments. And this could put further downward pressure on the housing market through panic sales. These people can't afford their new mortgage payments and they just want to offload these assets for whatever they can get them for. This is definitely a huge concern because of the fact that, housing prices have already come down so much. And if there's no buyers on the other end, then it'll be a mass panic to offload these assets. So something to take into consideration, especially since 6 out of 10 different mortgage agents and real estate agents were willing to offer this, which is a huge number. So we'll move on to the housing bubble conversation. Obviously, it's something that we've discussed many times before on this channel and something that is definitely not news. Canada is in a housing bubble, but just by how much? Well, what BMO says is that Canadian real estate markets are up to 76% overvalued. They are predicting a further correction. We've definitely already seen some type of movement, but they just show a visual of what the trend has been in the Canadian real estate market since the 80s to today. Obviously, the past 2 years, we've shot way above trend. And we can see in the green line here that we are inching closer back to what that trend line is and what BMO calculates to be a 3% growth rate year over year in real terms, meaning that they've taken inflation out of the equation. So they've accounted for it. And, if we look at that period between 95 to 2005, we definitely trended below. And we could be heading into a period where we go below the trend line even now. So they say 76%. I don't know what that means. I don't know if we actually hit that is what I'm trying to say, but that is a huge number to consider. Another bubble conversation is UBS. They put out a global real estate bubble index and Toronto took over the number 1 spot from Frankfurt, and the red indicates a bubble risk. And obviously, you see some of the other key areas throughout the world, your Frankfurts, Hong Kongs, Amsterdams, Miamis, LA. For us to take the number 1 spot is just absolutely ludicrous, especially when you look at the population. They go on to say that, you know, the reason that we are number one is because we don't build enough. There's a housing shortage. With all of that being said, it's important to note that another concern, and the last concern in this video, is the 5-year fixed mortgage rates. We've covered how the banks come to this, you know, calculation of what it's going to be. So if you want to check that out, I will link it above. But it is important to note that as the Bank of Canada continues to raise the overnight rate, the banks in the 5-year fixed will continue to hike what their interest rate is. And with that being said, we know that Tiff Macklem and the Bank of Canada has already come out and said that they are looking to raise interest rates again on October 26th. So these numbers could even be potentially going higher. What we have here is just some of the banks on ratehub.ca of what their posted rate is. And we start getting north of 5%. CIBC being one of the big six at 5.17. Then we start getting into the Bank of Montreal, 5.35, TDs at 5.44, Scotia, Simply, and National Bank crossing that 6% threshold at 6.14. This is going to make buying homes more expensive, and it will probably slow down buying, and won't be any buyers for those that are panic selling on the other side that have had mortgage, variable rate mortgages, and those continue to creep up higher and higher. So these are the 3 concerns that I'm kind of watching out through the market. We have obviously the potential for the mortgage fraud people to be panic selling. We definitely have an opportunity to burst this bubble. And obviously, as rates continue to get higher, it makes buying homes even more expensive. So let me know down below what you think this housing market could correct to. Toronto, is it protected because it's a big city, or could you see 10, 15, 20, 25%? Could you see a 70% correction, what BMO is saying? Let me know your thoughts down below. I hope you all have a great week in the markets. Happy trading.